Hi guys, welcome to my YouTube channel. In this video, I'm going to talk about Forex timeframes, lower timeframe structures, and higher timeframe structures. In Forex trading, a timeframe refers to the duration of time represented by each candlestick on a chart. Different traders prefer different timeframes depending on their trading style and goals. The two main categories of timeframes are higher timeframes and lower timeframes. What is the difference between these two types of timeframes, you might ask? Well, let's start with higher timeframes. A higher timeframe refers to the daily, the weekly, or the monthly chart. These charts display price movement over longer periods of time, and each candlestick presents a large duration of time. For example, a daily chart may have a single candlestick representing an entire day of trading activity. The main advantage of trading on higher time frames is that they provide a broader perspective of the market. This makes it easier to identify long-term trends and potential support and resistance levels. Higher time frames can also help traders filter out noise and avoid false signals that may occur on lower time frames. One of the downsides of trading on higher time frames is that the trades take longer to develop. This means that traders may need to have more patience and be willing to hold their positions for longer periods of time. Additionally, stop loss levels may need to be set wider on higher time frames to allow for market fluctuation. Lower time frames, on the other hand, typically refer to charts with candlesticks representing shorter periods of time, such as the 4-hour, 1-hour, 30-minute, and the 15-minute chart. These timeframes provide a more detailed view of the market, allowing traders to identify potential entry and exit points with greater precision. One of the advantages of trading on lower timeframes is that trades can develop more quickly, which can be useful for day traders or scalpers. Additionally, stop loss levels can be set tighter on lower time frames, reducing the amount of risk exposure. However, one of the main downsides of trading on lower time frames is that they can be more prone to noise and false signals. This means that traders may need to be more disciplined and selective with their trades to avoid losses. Additionally, trading on lower time frames may require more attention and time commitment, as traders need to monitor the charts more frequently. Now that you have an idea of what lower and higher time frames are, let's discuss lower and higher time frame structures or patterns. Basically, lower time frame structures are patterns that are easily identified and found on lower time frames, and higher time frame structures are patterns that are easily identified and found on higher time frames. I have drawn this table to help you differentiate between lower time frame structures and higher time frame structures. And it is also somewhat of a summary of what I've been talking about so far. The first difference is the duration both structures take to develop. Higher time frame structures take longer, whereas lower time frame structures take a shorter duration to develop. The second difference is the number of points or pips price will probably move after a breakout. Normally, price moves a great or significant number of pips after breaking out of a higher time frame structure, but would most likely move a moderate number of pips after breaking out of a lower time frame structure. The third difference is the time frames. You would most probably find it easier to identify these structures. You will most likely find it easier to identify higher time frame structures on higher time frames. On the other hand, you will most likely find it easier to identify lower time frame structures on lower time frames. The fourth and final difference between these two types of structures I would like to talk about is the duration price would most likely take trending or impulsing after it breaks out of a structure. Price will most likely trend or impulse for a longer duration after it breaks out of a higher time frame structure, and will most likely trend for a shorter duration after breaking out of a lower time frame structure. Thank you for watching this video. On the next video, I'll give practical examples to give you an idea of what we've been talking about so far.